Good morning. It's Harvey Jackson with Producer Profit. Just going to have a look at the USDA veg oil changes and a few other articles. There's going to be a lot more analysis in the next short while on the USDA. So let's just get into it here. One of the other news items is just talking about Trump trade and what some of these countries might do to counteract it. And I don't believe that this is actually a true thing. It looks like the U.S. economy is just going strong, and all of these other economies, including Canada, just having issues. Now, are we going to try to keep our Canadian dollar weak so that we can export to these countries? It's just a fact of what's going to happen. But there may be some headwinds with the U.S. With their protectionist problems. They might not be able to hold the high U.S. dollar. Palm oil was down again. We'll see that in the charts. So Karen Braun has some different insights on a lot of the markets here, but in this little indication is just talking about soy oil exports, and I'll show that maybe in a different graphic here. But you can see just where we are, where the expectation might be. So the biggest thing that actually came off from the USDA was just where world ending stocks ended up being on corn and in the U.S. with the stronger demand and the stronger U.S. Grind on the ethanol. It really contributed. A lot of people were expecting that to maybe get slow played into January, and that never happened. And of course, this is kind of fitting into expectations of South America crop still growing. So there's a lot of just a bit of a guess when the crop is still growing. What is it going to produce? But so far they haven't had any real issues yet. So here I'm going to just maybe highlight they did make some changes on the Canadian canola because here's the USDA's number as of last month. It was saying that Canadian canola was it's going to produce 20 million metric tons. They reduced it down to 18.8, which was actually the September number, and our most current StatsCan came out at 17.8. So they still can take off another million off of these, especially this one. Sorry, maybe not the top one, but you're going to say global canola ending stocks is going to be a million less than the number that's there. Now, I kind of dove into palm oil a little wee bit as well and just see the differential there too. And they took off a million off of there as well. And is that enough? Is the question, right? So that's on the production side. Here I'm looking at the soybean oil exports from U.S. and other countries, but the main one is U.S. here. And you can see that they basically almost looks like they're going to almost double their exports if if there's any problems with the U.S. With oil mandates, they could definitely get into this kind of a range. And if the rest of the veg oils are tight, they can definitely start exporting at these kind of paces that they've seen in the past as well. So that just a FYI. So this is December. Sorry, my bad. Anyway, so let's just have a look at what the markets are doing here too. Canola is down 2 to 2.3. Yeah, they're just ranging $2 to $3. Rapeseed is down or 3 1/4. Soybean oil is down 0.25 cents of a pound. Palm oil is down 117 ringgit, and your crude oil is up. Soybeans are trying to trade at that $10 mark again, 9.99 as I look at it here. And then wheats are just basically unchanged to maybe slightly up. And the Canadian dollar is trying to edge down a little bit here as well, both sides. So the canola here, I'm just looking at, I actually added in a longer term 200-day moving average. Now that we've went across the 100-day moving average, we're trading right in this mid-range, 61.8 is probably your support down here. So now we're trying to get into short-term move on the way up here. A lot of green days, expect a pullback or even a setback on some of these days. Like you probably have to have a little bit of a pause at some point on this market moving up, just to give the market a little bit of a breather here. Here's your November 25, still looking for targets, in the higher range into the 660, 650 to 670 kind of a range. We're a long ways from there. We're at 611. There's a big inverse between current crop year and next crop year yet. Here's your European rapeseed. Nice leg up. Looks like it's trying to take a little bit of a pause here, but we're at just about full retracement on the move back up here. So we're trading right at the 23.6 on the way back up. Your differential between rapeseed and canola trading at 176. still a big differential between Canadian canola and rapeseed. Still going to continue to find export partners, I would think, with that kind of differential, and it's going to put pressure on the canola crushers in Canada as the price in other parts of the world might be pulling this product away from them. Soybean oil seems to be a dog that doesn't want to hunt here, just not going anywhere, kind of going sideways. There's some, it's beat some of the moving averages, but there's seem to be headwinds there. And I think an export program for the soybean oil, if there is no mandates for the renewable fuels that come through anytime soon, it's probably going to find some life there too, even though there's very little stocks left in the U.S. Trading lower the last few days on the palm oil, so that's not helping us. But just knowing the price that it is differential to other products, it's actually still supportive. Crude oil in this downward wedge, and it still seems to be stuck in it. It hasn't traded outside of that wedge. Now, is crude oil actually helping us or hurting us? I'm not going to debate that right now. But here's your diesel fuel price. It's still in this wedge as well, downward wedge. Soybeans, this is the just basically been going sideways in a range since November, and caught in it and not really trying to get any. You could say that you can maybe see a little bit of an uptrend here, but it needs to get above this level, which is probably 10 and a half. Ultimately, you need to get to 1020 probably to say that you've got another resistance line above to be supportive. Canadian dollar. This is just such a disappointment. And when you look farther back, we definitely don't want to be playing in this area where we had a fair bit of economic issues in Canada back in those years. Slow growth, banking issues, you name it. Canada was not favored in the export market, but it did help us export maybe our way out of it a little bit. Wheat, this story is looking better, but it still needs to get above some of these technical levels. Like yeah, it needs to make higher highs than the highs that we made back in November. Ultimately, you need to get into probably this kind of a range, 640 to 650 kind of range before I get too excited about wheat, and that's a seems like a long way to get going up there. Here's your Chicago wheat. Same thing. It's got a little ways to just even get to that same November peak that we had in the red spring. Your Kansas, a little ways to get there as well to get to that peaks that we had back in November. So we have to get above that. Basically close to that 575 or higher on Chicago or Kansas. Sorry, your milling wheat is actually looking a little bit better but thinner trades, so very little length to some of these candles. But there is the 50-day moving average is still above this one here for to get above, and it's right at that 61.8 retracement value too. Corn, this is the excitement in the USDA was how this we've had this length of going higher. We've crossed over some resistance. If you had this as a resistance point, it made higher. And now we're approaching a 200-day moving average, and this past high as well is the next thing that we have to kind of hurdle out to get above. Really no other reports that are really significant. USDA will be announcing when they're going to be putting out their, and I'll be putting a new sheet here. The next stat scan is back. We have to wait until February, but we'll be getting some other stuff right around crop production and Brandon Ag Days as well, where we get some pricing indication. So that's all I have here today.